everyone. It's Alyssa Corum here with Justin Nielsen, and on today's Tale of the Trade, we are looking at Alibaba, a name that we follow closely here at Investors Business Daily, Chinese internet giant that has seen some great performance, and it's been a great swing trade.
Absolutely. It's one of those stocks where, in China, with the regulations, I mean, the fact that they can shut Amazon out basically is one of the big stories on that. And they're just really killing it in terms of the retail space.
That's right. Well, let's take a look at an opportunity that Alibaba presented recently for swing trader. So the time frame that we're looking at here was late May, clearing resistance over that 200 level. There was also a double bottom entry here, as you can see on the chart, at 201.60, but you guys wanted to get in a little earlier.
Yeah, that's one of the things we do on Swing Trader a lot of times is we will be looking for these shorter consolidations, maybe within a larger pattern. And so in this case, we did see that resistance that was happening right around the 200 level. And so while the traditional entry would have been from that double bottom at 201.60, we snuck in a little bit early, just above 200.
All right. But then what happened the next day?
Well,
we saw a bearish reversal.
Yeah, it was a bearish reversal. And the fact is that the NASDAQ at that time, the market in general, had been getting a little choppy. And so we weren't ready to be too aggressive, and we were still a little cautious. And so because of that bearish reversal, we did take half off, just in case. I mean, it didn't trigger a stop for us, but we just were cautious and we did take half off.
All right, so now that we have the position size reduced, the stock did start to recover after a few days. And so then how did you step by step look at this? Because the next day after that reversal, we saw a mini reversal the next day.
Yeah, but that was an inside day. Didn't really concern us as much. And then it got back into clearing that area of resistance. We probably could have added the position back at that point, to be truthful. But, again, the market still hadn't really righted itself, so we were still being a little bit cautious, and we didn't want to get quite aggressive yet. But then a few days later, then we're at our 5% profit goal.
So then what happens at the 5% profit goal? In our last example that we looked at, that's when you took profits, half profits there. But what did you do in this case, since on day 2 of the trade, already reduced that position size?
Yeah, that did kind of change the math on this. Because when you have half profits already taken, if you do another half, now you've got a quarter position. And if you've got a quarter position, it's hard for that to make as much of an impact on your portfolio, even if the stock does great. So what we decided to do in this case, we still raised our stop because that's what we do.
To
1% profit, 1% profit from our entry. We raised that stop and we held on to the shares from there. But it did hit that 5% profit level, and we had another bearish reversal.
That's right, we did. So then what happened after that? Because the market was looking okay, so it wasn't really participating in the move by the market.
Exactly. So you had that bearish reversal. The next day it was down, not much, but it was still, it tried to rally, closed at the lows. The market, the NASDAQ especially, the leading index, that was up on both of those days. So the fact that Alibaba wasn't participating was something that made us a little bit, it made us a little bit more cautious. Now, that's for the short-term prospects.
Yeah, for a swing trade, which looks at a shorter time period.
Right, exactly. So we ended up taking off that remaining half position at around 208. And as a result of that, now it wasn't like it had done anything wrong, but we took it off at that level, and as a result, we missed that June 7th correction. It was down almost 3% that day.
That's right.
We were already out at that point.
That's right. Pretty heavy volume, a considerable decline there. So for this swing trade, all in all, missing out on that big down day and locking in a nice gain.
Yeah, exactly. So it was about a 4% gain from our entry. Now, because of the half position sell that we had on Swing Trader, you'll notice on our past trades, we'll only show half the gain because we're taking into consideration that half position sell too, just to keep the entire trade in perspective and keep the numbers honest there. But, I should also mention that this is a stock that's on leaderboard.
Exactly.
So if you were, having a longer term perspective, which leaderboard does, on leaderboard, we're holding stocks for a couple months, not a couple weeks like we are on Swing Trader. And because of that fundamental story that we talked about and everything that Alibaba has going for it, this is something that that little, jiggle is just a blip on the long-term horizon. And so this is something that we continue to hold as a half position on leaderboard.
That's right. It looks like it's, it never really breached that double bottom buy point. So
right. It stayed above that level. In fact, really, if we had a 10-day moving average on this, that's a very short-term moving average. It really came down to that 10-day moving average and did get support there.
All right, everyone. So we have the tail of the trade here for you, Alibaba. Justin has all the details in his Swing Trader column. And of course, we want you to check out investors.com/swingtrader for more. And again, this is also a leaderboard name. So make sure to check out leaderboard.investors.com as well. We'll see you next time.